Imagine this for a moment. You live in Florida, but your dream has always been to own a home in the mountains. Not just any mountains, the Blue Ridge Mountains in northern Georgia. You find the home. In fact, you go out and find the furniture. And then all of a sudden, your banker's telling you that in order to buy this home, you have to put down another $40,000, $50,000 that you just don't have. What do you do? How do you end up buying this dream home? How do you tell the rest of your family you can't go through with the purchase? This is a situation that no home buyer wants to find themselves in, yet so many, month in, month out, regardless if it's Georgia, Florida, California, or Oregon, they find themselves in. Well, the good news is these people own their dream home today. They have that spot in the mountains with the stream going through the backyard. How they got there? Well, you have to tune in to learn and listen and hear exactly what my friend Chris did to turn someone else's no into their yes. Check this out. So we're back for another edition of Talk Mortgage to Me. I have with me for the second time my friend Chris Galli. He's with Novus Home Mortgage. He's a producing branch manager, lives in Sarasota, Florida, but he lends in all 50 states. And Chris, you were just telling me about a particular transaction that your team and you just closed. It's for someone that you know, which, by the way, they're 1099, these people.
Correct.
Right? So that means their income is not guaranteed the way it would be if they were working for like corporate America. I'm sure if you're 1099, there's a chance the income is variable.
Correct.
And your client had his eyes set, and the wife had her eyes set on their dream home.
Correct.
Right? And this dream home was a cabin, right?
Yeah, beautiful cabin. It was unbelievable, and this is a gentleman I've done a lot of business for in the past. He had decided to try a different banker out that he may have had a relationship with.
It happens.
It happens. And I didn't even actually know about the transaction until I got the call.
Okay.
Right. So my wife and I, Julie, we get the call from our friend.
Because your wife's one of your business partners,
Correct.
right?
Yeah.
Yep.
My wife, 25 years of doing the business together and doing life together.
Yeah.
Literally, crazy. She's actually outgrown the teacher. So
I was going to say she's the brains.
Yeah, she's the brains. She's
And
the
she's the
looks.
beauty.
She's it all. I'm like
you're the
Quasimodo.
Yeah, you're the muscle.
sweeping the floors
Yeah.
in the back. So, when this gentleman called us, he was beyond himself because this had been his dream. It was the perfect cabin. The price point that he was getting this for was unbelievable.
So he was getting a deal.
And a great deal.
What was he buying it for roughly?
I want to say it was somewhere around 700.
Yeah, so $750,000.
Correct.
This isn't just like some small
Correct.
cabin. This is luxury. This is nice. Okay.
Very nice. And they already had all the dreams of what they were going to put, they're going to rent it out Airbnb and do some crazy stuff with it. So when he came to us, I needed to understand the whole story. So basically what they were doing was a debt service coverage ratio loan.
Yeah, which for those that aren't familiar with DSCR, here's the easiest way I can explain it to you. It's a loan that's great for people who are buying real estate for investment purposes.
Correct.
And you don't need traditional income to qualify.
Correct.
You actually qualify based on will the rent you receive, will they cover the mortgage payment on an annual basis? It's on a very basic explanation, that's what it means.
Correct.
Now, some DSCR loans may allow you to do 15% down. Some may require you 30% down. Most, you're probably looking at about 20% down.
Correct.
But it's great for someone who has non-traditional income or for someone who, without the rental income, possibly wouldn't qualify for more conventional financing. So it's a pretty popular loan product here, 2025, 2026, and beyond.
Correct.
And that was the loan program of choice that your friend was going with this other banker, right?
Correct.
Okay.
And what I can see from the outside looking in, working with a broker, right, has to deal with an account executive, not an underwriter. So what happened was it was the day before the closing that he found out that the deal was dead.
In the 11th hour.
Literally the 11th hour and 59 minutes.
Ooh, that's like the worst of the worst situations. Okay,
Correct.
So your colleague, your friend, your client, we'll call him. Your
Correct.
client finds out in the 11th hour that this isn't going to work.
Correct.
Calls you in a panic. He's probably pissed.
Yeah, and I think you had a little bit, too, is like, okay, I'm going to you, telling you I was cheating on you.
Yeah.
A little bit, which was fine with me. I don't care about that. Like,
Yeah,
listen,
it happens.
let's put that aside. Let's just
Yeah.
find the solution
Yeah.
for where you're at. Tell me exactly what happened. And I knew who the other lender was. I'm also friends with him in a sense,
Okay.
too. So he was able to at least cooperate in getting me some of the paperwork I needed to have a better understanding on the scenario. So what ended up happening to him is when you broker something out, a lot of times what happens, you don't have a lot of control with the underwriting scenario. So it's very reasonable that he finds out in the 11th hour that the deal's dead from their
Yeah, it's
underwriting
not
side.
the broker's fault.
Correct.
It's the investor that he sent this transaction
Correct.
to, and their process, their system was one in which things just didn't happen overly timely.
Correct.
Okay.
So in the last minute, everything was, not on the bad. I don't want to knock any other
correct.
lender or any of
but
that stuff.
What was the issue, though? What was the main issue that this investor who was underwriting the file didn't like?
They probably should have caught it a week and a half earlier when
Okay.
they got the appraisal back. So whatever investor they used for this debt service coverage ratio loan, they had a guideline in there that if it was in a rural area, you had to put at least 30% down versus
Okay,
the
which
traditional
most
20.
cabins I've ever been to, at least the ones I want to go to, they're in rural areas.
Correct.
Okay,
Correct.
but this particular investor, and there's a story here.
Yeah.
No one investor is made the same. No bank
Correct.
is made the same. And when we're talking about loans that are what we consider in the industry non-QM, right?
Correct.
Meaning it's a alternative financing type loan.
Yes.
Then you don't have a standard set of guidelines.
No.
So you can have one particular non-QM loan that you underwrite, and I can have another one, and our guidelines can vary.
Can be
Everything
different.
from minimum FICO score all the way up to minimum down payment to so many other factors, right?
Correct.
So your person, as you shared it with me, they're basically told in the 11th hour, if you want this home loan, you have to come up with an extra $75,000
Correct.
for a down payment.
And what do you do with that?
And yeah, and what are you going to do? So what did they do? Did they come to you and you just flipped them into a different debt service coverage ratio loan, or did you do something different?
I did have that option available.
You did?
I did actually have an option available that would have left it at the 20%, but after I dug into it a little bit more and asked him some more questions about his situation and how his income worked, did he deposit money in his bank account on a regular basis, I found a better loophole with no prepayment penalty, as most DSCR loans have, better rate, and I said, well, what
Probably
if
less fees?
less fees? What if we put not as much upfront cost, right?
Yeah.
I said, what if we go bank statement loan and I can turn this over in a week and a half?
Okay, so here's another kind of pause moment, because why is Chris and why was this other broker doing loans such as a DSCR, or now you're getting ready to talk about a bank statement loan? Well, it comes down to this. On the client's own, if you just got their tax returns, because of how they prepare their taxes, because of the tax loopholes they take advantage of, because of how they're paid, etc., the amount of income that they document, according to the IRS, isn't enough to qualify. At the end of the day, it doesn't support them owning their home in Florida plus buying this cabin. Yet they have the funds, the credit score. They're going to make the payments. They're going to rent it out, VRBO or Airbnb, and they're going to actually collect some income.
Yeah.
But when it comes to qualifying for conventional financing, they didn't fit in that small box that is set forth by Fannie Mae and Freddie Mac.
Correct.
So you and the original lenders first thought, well, because you're going to rent it, let's look at DSCR.
Correct.
But when that person couldn't qualify them because it was deemed a rural area, you said, well, I have a similar product, but I can qualify you DSCR. However, the rate is going to be higher. The fees are going to be more. I may have a better option.
Correct.
So that other option was
going with a 12-month bank statement. So
walk me through, what does that mean?
So what I'll do with a self-employed borrower, 1099 borrower, is I'll look at all their deposits. So I'll add up all their deposits over the last 12 months.
Personal or a business checking?
Either.
Okay.
So wherever they put more money in is typically what I'll ask them is, where do you put most of your cash?
Okay.
Is it in your personal bank account, or do you run it all through your business? And if it's through the business, we'll look at the business. If it's through personal, we'll go through the personal. But we add up all those deposits over the last 12 months, and then we divide them by 12, and boom, we got the number, right? So let's say, for example, in a perfect world, people deposit $8,000 a month.
Yeah.
They got $100,000 a year of income that we can use. And to qualify, just like any conventional loan, we can use up to 50% of that to cover all their liabilities, meaning revolving debt, installment debt, and any other housing expenses. Or two, if they get a CPA letter, I can actually go even higher if the CPA says they only use 30% for taxes or 20%, but it's signed off by a CPA. I can literally up that debt to income ratio, if you will, even higher. In this case, I didn't have to do that. We were good with the 50% based on what he provided for us, and it gave him a better rate, a better term than not just the debt service coverage ratio loan we could get him, but the one that he was getting before.
Yeah. So it was all around a win for him.
It was a big win for him. Our rate was actually better on the DSCR as well, but I didn't think that was the best option for him, knowing that he had the income, just not traditionally speaking, but he had it.
Well, it's another reminder that there's no such thing as a one-size-fits-all mortgage.
Correct.
And, not every lender is built the same. Not every lender offers the same. And, it sometimes works in guys like your favor. Sometimes it works against you, right?
Correct.
Sometimes you might not have access to something that someone else does. But in this case, you took someone who is getting ready to have basically their heart ripped out of their chest and their dreams put down the garbage disposal and said, no, wait a minute. Like, there is a way to save this. And it wasn't even using a DSCR loan. It was actually looking at a bank statement loan. Correct. The good news is there's loan products out there for people who are self-employed or they're 1099 or they're real estate heavy in terms of the assets and the income that they carry, that, if you hear no, before you just take no as an answer, you should talk to someone that is well-respected, that has 20 years experience, that's funded thousands of loans, because someone like Chris can look at your situation. If they ask the right questions, if they peel back all layers of the onion, right, not only is there maybe a better option, there could be a different option that also happens to be better.
Correct.
Lots of learning lessons there. How quick did you end up closing that loan?
It took me 2 weeks.
Only 2 weeks.
Yeah, only 2 weeks.
Right, that's quick. I mean, the average cycle for a mortgage is anywhere between 3.5 to 4.5 weeks.
Correct.
So you came in, you saved the day. Your client has that dream cabin in the mountains with the stream.
I have a place to go too.
You have a place to go. I bet you do. I bet you do. Chris, remind us, if we want to get a hold of you, if somebody is tuning in right now and maybe they're trying to buy their dream cabin, maybe they too are 1099 or self-employed, or heck, maybe they were just recently told no, but they feel like that no is not justified.
Correct.
Which, by the way, there are many no's that are justified.
Yeah.
Right? If you have a 480 credit score, it's probably justified.
Correct.
Right? You had a bankruptcy 30 days ago, it's probably justified. But there's a lot of no's where it's not justified.
Correct.
How would someone get a hold of you?
They could call me on my cell phone. My number is 508-450-6873. Or you can find me on any social media. My name is Chris Galli. That's Galli. And I'm on Facebook, Twitter, LinkedIn. I'm on all of them.
You on TikTok too?
I'm on TikTok. I'm a TikTok maniac.
He even TikToks. Y'all, he's Chris Galli. I'm Dustin Owen. This is Talk Mortgage to Me. If you like content like this, make sure you click subscribe. Share this episode with anyone you know that would find this content valuable. And if you have questions, you can use the comments. You can reach out to Chris, or you can follow the link in the description. Either way you go, we are here to serve you, get you pointed in the right direction, and be a resource for you. He's Chris. I'm D.O. That's all the time we have for you today. But we do look forward to catching you on more content just like this on our YouTube channel. Thanks, Chris.
Thank you, Dustin. Appreciate you having me, man.
Yeah, you did a great job.
Thank you.